Okay, so good morning, everyone. Welcome to the Macro Snapshot. It's the end of the week. It is Friday, October the 10th, 2025, recording this in the morning. Obviously, had a quite substantial moves yesterday, especially in the precious metal environment. So let's just pull up quickly here the gold futures. So this is the gold futures generic contract. Now, what we can see here, of course, is that there was a bit of a pullback. But let's just put this into context. And really, this is a question of your time frame and your style. Because if you're, let's say, a day trader, this represents, a significant sort of opportunity for loss or for gain. But in the big scheme of things, gold has been on a massive long-term trend here, basically since the beginning of 2024. And as we can see here, if you look at all the moving averages and whatnot, the 20s, 50s, 100, 200 EMAs, the uptrend certainly remains in place. So obviously it was very, very extended. And if we look at something like the sort of the RSIs, which I can anyway. The point is that the RSIs were extremely overextended, the most overextended they've been for even I think a few years, and so we did get a big pullback. So the question now is, and at that $4,000 level, a similar situation in silver. If we look at silver, you can see that silver, it hit the $50 mark, which we haven't seen for sort of 10, 15 years or so. It's a big historical level. It hit the $50 mark, and presumably there was a lot of profit taking, and again massively overextended from sort of terms of stochastics, RSI, all of that kind of mean reversion, sort of those classical metrics. So from a technical perspective, a fairly sort of obvious and expected sort of short-term move. So really now the big question is in the precious metals, is there more to go? It looks here as though silver is consolidating just from a sort of a classical technical point of view. Having said that, the trend, the momentum, the moving averages are still pretty strong here. And if we put that, let's say, on some shorter term moving averages, which we can maybe do. So rather than the 20s, the 20, 50, 100, and 200, let's do something like 16, 32, 64. So these are a bit shorter term. But even those are still quite strong. And if you look at gold, they're still in a strong uptrend. And indeed, what we can see is already a little bit of sort of upward movement so far today in gold. Now, can this extend? I mean, the narrative is still very strong. The narrative is still one, the classic, everyone's calling it the debasement trade, this idea that there's a lack of fiscal discipline by most governments around the world, especially Western governments. We're seeing specific problems in France, in the UK. The US budget is out of control. Et cetera, et cetera. So the issue here is that you have a lack of fiscal discipline by governments. That we also have some sticky inflation, and that would maybe not be such a problem, but there is a sort of a creeping sense that central banks are losing their independence. Obviously, we're seeing the pressure which Trump is putting on the Fed. In Japan, we have the presumptive Prime Minister Takaichi coming in and sort of essentially making it clear. She made comments yesterday that the BOJ, would need to be working in concert with the government. Now, that's not a new thing in Japan because the BOJ traditionally has been an arm of the Ministry of Finance and is less independent politically, historically, than the Fed, for example. But the point is here is that, market participants are feeling that, larger deficits, a lack of fiscal discipline, lack of central bank independence, and and also some kind of geopolitical risk. So the question is, yesterday, was this just a combination, a confluence of spot silver hitting $50, gold hitting $4,000, and we had a little bit of a peace initiative, some good news potentially coming out of sort of the Gaza Strip, so less geopolitical premium. So maybe some of that geopolitical premium coming out of the market. Probably all of that is all true, but as we can see here in the big scheme of things, let's say for gold, I mean, yesterday we got a 3% pullback after essentially a 2-year rally, and there's zero sort of technical damage has been done at this point to the chart. So at this point, we have to just keep our eyes on the chart and say that the bulls are still in control. Could the momentum start waning? Yes, but at this point, there's no evidence that this trend will either, it is possible that it will consolidate, but there's no direct evidence that this will continue. It could continue downwards, but the evidence is not there. We simply had a 1-day blow off top, and we'll see if that continues. So much for that. Right. What else? Let's also have a look at copper here. So copper, similar kind of situation here. This is an interesting one here. If we look at just like this reversal of in terms of the Fibonacci level here, you can see that copper got to the 50%. It sort of paused at the 38%. It is now paused at the 50%. So again, copper's starting to lose a little bit of energy. And the point is here is that copper, there was some trade tension yesterday, or some, how can I say, diplomatic tension between the US and China. China, with their rare earths, slapped a bunch of export controls on their rare earths. Trump shot back and said, "Oh, we maybe we don't need to be importing as much." The Chinese have cut back on soybean sort of purchases from the U.S. So a little bit of a sort of an arm wrestle diplomatically happening between the U.S. and China, and maybe just that nervousness. Maybe that's part of the copper pullback. Also, it's been quite a nice run up, 50%. Now this is going to be interesting. The real tell here, really, what's going to give us the next move up is going to be probably I like to put some kind of fib retracement here. And really what the bulls need to do here is to come in here if it does pull back a little bit, the bulls need to come in on this fib retracement here around about 5,000 or even a bit lower. So that's the 38, the 50 and the 61.8 fib retracement here and push that higher. So at that point, it looks as though in terms of industrial metals, copper having a little bit of a pause. We also saw yesterday a little bit of a breakdown in some of the currencies. So we saw the US dollar doing pretty well. And let me just go up here. Where is the US dollar? But it's taking a little bit of a pause overnight. So you see the US dollar has been breaking out. This is the Dixie index, so in France. But the question, as I keep on trying to say, is this US dollar's strength, or is this really a weakness in a couple of other of the main components? Remember that in the dollar index, we have about 57% euro. I think it's about 11% yen. So both of those currencies, for domestic political reasons, have had a little bit of softness. We know that in Europe we have the French political situation, which has been a bit unstable. We also know that we had the incoming the new presumptive Prime Minister Takaichi in Japan. So the question here, there hasn't been any negative data about the US economy released, and that's because the US government obviously is shut down. So the thing is here that the US dollar has felt free to sort of, float upwards, so to speak, based on weakness in other currencies. This is not necessarily a strength in the US economy or the Fed being more hawkish, because we just haven't had any data in the US. And so the thing here is, if we are to start getting data, the differentials now are starting to blow out a little bit and not really favoring this US dollar being stronger. And so, when and if we start getting data in the US, if they do show any weakness in the labor market or in the general economy, or maybe a sort of a stabilization or a softening of inflation, we could see the dollar being sort of reduced a little bit, or just reduced in its power. Sorry, that was a strange expression. We could see the dollar weakening a little bit and just coming back down under 99. Talking about data, we just got some news that the Bureau of Labor Statistics have recalled some workers in some way, and apparently they are planning to release the CPI next week. It is scheduled to be released on the 15th. Which I believe is Wednesday. So it looks as though we will have the CPI data next week. And as I say, that could cause a lot of volatility because there's been no data for the last, I don't know, sort of 6, 7, 8, 9 days. And therefore, things like the US dollar, the stocks, and obviously the bonds, which have been very, very low volatility, could get a bit of hit on that. Just looking this morning, what we are seeing, if we look at the euro, we're seeing just a little bit of stabilization. Euro, under still quite a lot of pressure because we have the French situation, which hasn't been resolved. Macron, excuse me, apparently is going to announce a new prime minister today sometime, in theory. But, there's weak political sort of backing for that new prime minister, and there's still quite a lot of fragility in that French system. And so those problems haven't really gone away. Nonetheless, it's looking a little bit more stable. If we look at the yen, we can see that the yen has gained a little bit of strength against the US dollar. I signaled this the other day, again, thanks to Nick Cartier. If you're watching, Nick, they're great charts. But basically, this area of confluence here, we have a big fib level here, very long-term fib. retracement here. We have the downtrend. We have an extended move here, a Fibonacci extension, which is reaching its climax, so to speak. So no surprise here that there could be a little bit of overhead resistance for the USD JPY. And in fact, what we're seeing this morning is just a little bit of consolidation there. Now, does that mean it's going to come down fully? Not necessarily. Again, it's going to depend on what happens in Japan, what happens in the US if we get any data. And talking about Japan, we actually overnight had higher than expected PPI numbers. So keep in mind that even though the new Prime Minister Takeichi, she is saying that she wants a more stimulatory environment. Maybe the BOJ doesn't have to be hiking interest rates. Nonetheless, the Japanese historically are not used to inflation. They do not like inflation, and it's a domestic political issue. It's the Prime Minister there cannot ignore any evidence of inflation. And the fact that last night we did get a higher than expected PPI reading in Japan just reminds everyone and the Prime Minister as well, the incoming Prime Minister, that in order to keep inflation under control, maybe the BOJ does have to normalize policy, and it's not simply a question of doing more QE, spending more money, stimulus, etc., because that would be ultimately a little inflationary. So all that to say, it's a delicate balancing act in Japanese politics. And so maybe we'll see in the US dollar here just having a little bit of a pause and running out of steam. Excuse me, having a little bit of tea this morning. Okay, other interesting stuff. We do have the Canadian. We have the Canadian employment numbers this morning. So before we look at that, let's just look at the Canadian dollar here versus the US. So this is the USD CAD, and as we can see, coming up to a very critical level here. I might just throw on a little sort of level here. So you can see that this is quite a critical level for the US dollar. We've had a nice run up. Also, if we look at the Fibonacci here, we can see. Whoops, sorry, I don't want to put that one on. I want to put my reversal fib on. So if we do this, we can see here that it also represents approximately a 50% fib retracement from this big downtrend here. So point is that this is quite an important level. We know that Canada, let's just look and see what's expected in the employment numbers. If we'll look at the employment numbers here for Canada. Canada's employment situation has been weakening. Obviously, there's been a lot of trade tensions between Canada and the US. We saw Carney in Washington at the beginning of this week. It's ongoing conversations, but there's still the Canadian economy is taking a hit. And if you actually look at the unemployment rate here, 7.1. So keep in mind the US unemployment rate is 4.2, or was it 4.3? Anyway, 4.2, 4.3. So the Canadian unemployment rate is significantly higher, and that economy, the GDP seems to be weakening, investment seems to be weakening, confidence is certainly very, very low. So the point is here is that this is putting the BOC, the Bank of Canada, under quite a lot of pressure. And let's just see what's expected today. And if you look at the net change employment, plus 5,000, absolutely pathetic. Last time there was a minus 65, very, very weak. This time only 5,000 jobs to be added, which is very, very weak. Participation rate. As always, we need to be looking out for the full-time and part-time breakdown. And if you look at last time in Canada, 6,000 jobs were lost, 60,000 part-time jobs were lost. So we need to be looking at this number here. 7.2 is expected, so the unemployment rate is expected to tick up. The Bank of Canada does look at that. And if we just look here at, this is pricing for the Bank of Canada, you can see here at the upcoming meeting at the end of this month, only about 15 basis points of a cut is priced in, so 60%. So a full cut is not yet priced in, it's sort of in the middle. We can see that another cut is priced in by the time you get to the end of the year or going into the beginning of 2026. Some of these meetings here, you can see that we start to get over one cut. So let's say 1.09, 1.2, 1.3. So the point is that there's still a little bit of uncertainty leading up to this upcoming October meeting. And if in Canada there's very, very weak data this morning, that could cement that, and we could see this, the implied rate of change of the basis points from minus 15 cuts to maybe minus 20, minus 21, and we could see the probability of a cut go from 60% to maybe, I don't know, 75, 80%, something like that. So that's going to be quite important. And in terms of the Canadian dollar, as I say, if we do get a weak a weak number. I mean, it's interesting here. Could it be that the US dollar, gets through this level? On the other hand, a stronger than expected number, let's say we get plus 20, 30,000 or something like that, unemployment rate remains stable or even ticks down to 7%. That could be a useful, way to sort of profit take here. And, maybe the US dollar can just take a little bit of a pause here. Other things to be looking out for, just I was talking to someone about this Australia, New Zealand. You can see here at a very key level here, the Aussie New Zealand dollar. You can see that if we go back and put it on a sort of a slightly longer term chart, you can see here that we're getting to an important level. I'll just sort of bring that up to there. Now, we know that in New Zealand, I mean, basically there are diverging monetary policy paths, and we know that the New Zealanders, Reserve Bank of New Zealand, at their decision a few days ago, they cut 50 basis points, which obviously was, a weakening for the New Zealand dollar. Why did they cut 50 basis points? As I was saying in the, I think the Wednesday video, because there was slack in the economy, there was too much excess capacity in the economy. They believed that there were deflationary risks. So therefore, the Reserve Bank of New Zealand not only did they cut 50 basis points, but the statement and forward guidance was fairly dovish. So definitely, this weakness in the New Zealand versus the Australian dollar is justified. On the other hand, from the Australian point of view, we had the RBA, which is still at the most recent statement talking about sticky inflation. The economy is doing relatively well there. So there's definitely, it seems to be divergent paths, not only on monetary policy, but also the general economy. So I would say this is an interesting one. Can this break through? We've had a rejection here, and it's come a long way. But I don't know that the Australian dollar will necessarily be weakening against the New Zealand dollars. Certainly, from a risk reward perspective, this is it's not a bad place to be shorting. And one could argue that that divergence in monetary policy and the real economy is priced in. So at this level, from a purely trading point of view, with a tight stop loss, it's not a bad place to take a shot. Just finally, just want to have a quick look at a couple of the bonds, specifically the French bonds. As I said, Macron is going to be announcing a new prime minister. So we've seen on the back of that sort of optimism that the French bonds here, the OATs, the 10-year, you see that they came off on that political uncertainty, but over the last 2 or 3 days have been pushing higher based on the fact that Macron will not resign. There will probably not be a new elections, and there'll be some kind of coalition cobbled together, even if it's not completely stable. On the other hand, if that next government were to fall, maybe we could play some ping pong here, and that will sort of come down again. So just interesting to see here what happens with Macron's speech. Finally, just want to have a quick look at oil. Oil is down a little bit here. This is the generic contract, so November. You can see here it couldn't breach all of these moving averages, the 50 and 100, 200 moving average here, couldn't breach those. And just also on the fib level, it only could get up to the 38%. So, we know that the OPEC Plus last weekend increased by 137,000 barrels. The market initially took that as a slight bit of positivity, saying, oh, it's not so much of a production increase as feared. But the reality is it's still a production increase. There are still surpluses forecast, especially for the first half of 2026. And just recently, what's been happening in Gaza, potentially all the hostages being released, maybe within the next 72 hours. Any sort of geopolitical risk, a little bit of geopolitical risk is being has been taken out here, and that could explain why oil is coming off a little bit. What is interesting, though, we are, as I say, getting to quite interesting levels here. And so the point is 60.38. You see here, there's a lot of downwards pressure around this level between, I don't know, 61, $60, 60, $61. A lot of pressure. It's bounced a few times, bounced 5 or 6 days ago, bounced 3 days ago, and here we are again. At a certain point, you have to say, can the market continue to be supported at this level? And maybe really what the oil market is trying to do is just to have a quick flush out of all the stops. And again, if you put a Fibonacci extended extension or measured move here, going from this impulse here from when is that? The 26th of September. The measured move does project down to 59, 58, $57, depending where you stop it. So it would not surprise me if oil just drifts down another a couple of hundred ticks, maybe another $1.50, $2, $2.50. I do believe there should be support around about here. This is a nice level, and certainly anyone considering, if it does go down there, I think that would be a very attractive entry point. But for the moment, it's trading heavy. The time spreads are starting to sort of flatten down a little bit. And if we look at that, we can see Z25 to Z26. Again, this is December 25 to December 26. So you can see here that the time spreads also at a fairly critical level here. So it could be an interesting day and an interesting weekend coming up, because if oil breaks, it might have a little puke towards the downside. Okay, guys, we'll leave it there today. Probably we'll be getting some. The Nobel Prize was not awarded to Trump, so he might be a little bit in a grumpy mood today because he didn't get his Nobel Peace Prize. Apparently, he's stopped 10 or 12 wars recently. We also have some Fed speakers today. We have Daley, Goolsbee, and Mussalem. I don't know how much that can move the dial because, frankly, we had the minutes the other day, and similar to the ECB, but the Fed minute seems to be saying that, they're waiting for data. There are some upside risks. Excuse me, my throat's dry. Excuse me for that. There are some upside risks to inflation, but on the other hand, they do see some weakening in the labor market, so fairly balanced. So all that to say that I don't see Daily, Goolsbee, or Muzalem moving the markets particularly today. Okay, have a great day, have a great weekend, and we'll continue these next week. Thank you.